it's still a Schedule I substance in the United States, has been a big reason why institutional investors or private equity firms such as our past firm Partners Groups simply would not invest in the industry. So you're always going to have vice clause restrictions, and you're always going to have a lot of institutional firms that have boxed themselves out from investing in the industry in the first place. But we do expect for the pace of institutional investors to continue to increase here over time. So by quick background for myself before jumping into the market opportunity, and thank you so much for the introduction there, Graham. I started my career working at Goldman Sachs. While at Goldman, I worked on a variety of different teams, but mainly was focused on the emerging markets. Decided it was time to change pace of careers and wanted to get into private equity, and I found my way to the Swiss private equity firm Partners Group. While at Partners Group, I got to know Pete, got to know Jordan, was living in Denver for about 3 years, and the cannabis opportunity, to save you the long story, was just so apparent to us. After a long, thoughtful process, we decided that it was time to leave our traditional private equity jobs and to jump into the cannabis space, which frankly, and to partially your question there too, we just saw a lack of actual institutional investors tackling the space. So we want to really be one of the first institutional investment managers out there in the cannabis space, really upping the par and the level of due diligence that's being done in the industry today. And frankly, it's resonated really well. We've done quite a few of these CFA presentations, I'd say over 30 or so at this point, to different chapters across North America. We have also been tapped by the Financial Planning Association, which is the certified financial planning group. So we've been also doing educational sessions with them. And there's also been quite a bit of overlap with Kaya, the Alternative Investment Society. So we've also been doing that with them. So really, I think putting our brand out there and showing folks that there's unique ways to investing in this industry outside of the public markets. Our third co-founder, Pete Carabas, who cannot join us today, he started his career working for Sam Zell up in Chicago before moving his way to the real estate private equity team at Partners Group. Rest is history. We've co-founded Key, and we're off to the races here, raising our first fund. Looks like we do have one more question here. Where do valuations stand between private and public cannabis businesses? Are private businesses undervalued relative to public? It's actually a great question, John, and I'm going to go ahead and save that answer for a slide that we have on the public markets that Jordan will touch on later in the presentation. So we will touch on that here shortly. Jordan, will you move over to the state slide? Great. Well, I think that this is a fantastic representation of where the United States currently is as far as legalization. So at this point in time, you've got 33 states that have now legalized some form of recreational or medical cannabis. Over 2/3 of adults in America live in a state that has some form of legal cannabis now. And we really, as the slide is titled there, we really do believe that the time is now. Even just a few years ago, I think it was a much more speculative bet to get into the industry. It was maybe more a question of if legalization was going to happen. I think it's very apparent that legalization is certainly going to pass in the United States. It could happen here quite shortly through executive order with President Trump. As many on the line here may be aware, there's actually the House of Representatives is going to be voting on a landmark legalization bill that is expected to pass Congress. It's expected to fail in the Senate. However, you see that regulatory momentum continuing to push towards ultimately lifting cannabis and lifting prohibition in the United States. To give you guys an idea, the legal cannabis industry in the United States last year was about a $12 billion industry. That industry has been growing around a 30% CAGR, give or take, over the past few years. And that pace of growth is really all being driven by the consumer. So it's one of the big reasons why we got involved in the industry in the first place. You've got these massive tailwinds in this industry, in this emerging asset class in the United States. So we couldn't be more excited about that. Prior to COVID, cannabis was expected to grow to be about a $16 billion legal industry in the United States. Those growth expectations have actually increased due to COVID. And we'll get into that a little bit further in the presentation, but we're now expecting the industry to grow to be about a $17 to $18 billion industry. So getting close to about a 40% year-over-year growth, again, all driven by the consumer. I think something that's important to point out about the cannabis markets too is that because cannabis has been federally illegal for such a long time now, there's a massive black market that exists in the U.S. The estimates really do range from about 100 to 150 billion. So we always just go with the lower range. But one of those dynamics that got us really interested in the industry in the first place is that not only do you have this industry that's growing organically, onboarding new entrants and new consumers, it's also an industry that as it continues to mature in states like Colorado or Oregon or Washington, you're driving a lot of that growth from the black market. So not only do we have that organic growth, it's also evolving that $100 billion of embedded black market demand to the legal market. And part of our investment strategy by investing in enterprise level software and these ancillary or picks and shovels play is to really help these new companies come about and run their businesses more profitably, more efficiently, to start to drive some of that black market demand to the legal market. So if there's no questions there, I will move over to the next slide. Looks like we do have a third question. As Canadian investors, will the US market differ in structure and approach from Canada? Jordan, maybe I'll let you take that question there. I'm not 100% sure what you mean by that. Do you, Sean, do you mean by the structure of our fund, or are you asking how to access US investments is what I assume you're asking there? I'll wait for you to respond there, but I'll move on to this slide right here. So number of marijuana related bills. So this slide is really just a continuation of what I was discussing there, that cannabis reform and the momentum of legalization is truly in our favor here. So as you can see on this timeline down here, the amount of bills that have been introduced before US Congress over the past 20 years have really started to increase exponentially, again, giving us a lot of confidence and a lot of visibility into how we expect for legalization to play out. To give you guys just an idea, it's our house view that legalization is probably around a 5-year horizon. But there are some events that could make that happen much more quickly. Again, I mentioned that the U.S. House of Representatives is going to be voting on this later this month. If by chance the Senate surprises us and passes legalization, then there you have it. It happened in 2020. We could also see by executive order, President Trump taking this away from the Democrats as a means to bolster his status and to gain more votes from the Democratic side as well. However, he would be indirectly supporting Senator Kamala Harris, which is obviously now his opposition, running for vice president on the Democratic side. So I think that that's also a low likelihood event, but there's certainly low likelihood events do seem to happen, and history does paint a picture. So don't want to completely rule that out until we see how history unfolds. Looks like Sean, investing in securities and the market structure of companies supplying the product for sale. Jordan, I'm going to go ahead and let you answer that question.
Sure. And I think this dovetails into our discussion on the public markets, which we'll get to in a few slides. But I'd say the main difference I'd highlight is that Canadian operators are able to access major exchanges for public markets, right? So that's why you've seen companies like Cannabis Growth, Tilray, Aurora, and Kronos, which are all Canadian based and don't have US plant touching operations. They've all been able to list on major exchanges like the NASDAQ or the NYSE. But both of those exchanges will boot you off if you have any US plant touching operations because it's still federally illegal. So what that's done is it's made most US multi-state operators who want to list publicly have to list on this thinly shaded exchange called the CSE, the Canadian Securities Exchange, which has a whole host of issues associated with lack of governance requirements, lack of liquidity, FX and transaction fees. So it's just a much less attractive way for companies to access public markets, but it's what you have to do if you're a US multi-state operator. And then in terms of being able to develop a supply chain, there are also certainly a lot of different intricacies in Canada versus in the United States that make things different. For example, like Ontario, the province didn't issue nearly enough dispensary licenses initially, so you had a big supply chain glut back in 2019 where there just was not sufficient product to supply all of the demand. So that's why you saw a pretty major contraction for the Canadian-based businesses at the second half of 2019 when those revenues didn't materialize as people had initially expected. So those I'd say are some of the major differences. overall, I think over time, you'll see more and more convergence as the industry matures and both Canada and the US really get their act together from a regulatory side. But in the meantime, there's all kinds of little different intricacies that are important to be aware of. So with that, why don't we head to the next slide, which shows a little bit about where all the growth is coming from. As you can see, today and into the future, the vast majority of the industry will be driven by North America, predominantly the US and Canada. So it's a really exciting time. As Tiby mentioned, the industry continues to grow at 40% plus CAGR. And as we also discussed, there's this huge availability of demand already existing on the black market, right? It's different from other emerging sectors like virtual reality or artificial intelligence, where no doubt there's going to be massive applications and demand for that technology. But it's very difficult at this point in time to really be able to target and understand how large those industries will be exactly. Whereas with cannabis, we know that there's this existing $100 billion of black market demand. So we just need to look for the companies that are most successfully transitioning that demand from the black to the legal markets. Additionally, the other thing that's important to remember is most of that black market demand are folks who are buying marijuana from drug dealers, and the vast majority of that black market demand historically has all been flower. Now, as you're seeing things transition to the legal markets, number one, you're opening up that market for a whole new host of demographics who maybe aren't comfortable with purchasing from a drug dealer, but would certainly be willing to go into a legal dispensary and purchase it there. Or now you can purchase it even through an app and never have to step into a dispensary yourself. Additionally, as new form factors have opened up and folks have been able to purchase CPG-based edibles and tinctures and concentrates, which you can smoke in a vaporizer pen, that's also opened up a whole host of new demographics for people who weren't comfortable inhaling something like flower that can bust in your throat. So again, it's just expanding the size of the market, which we are so excited about. And what's unique about cannabis in particular is that, as opposed to some of those other emerging industries I mentioned, like AI and VR, well, in those industries, you've got billions and billions of institutional dollars from venture capital firms, from private equity, from hedge funds, all chasing the same deals, driving up valuations, making the terms much more company friendly. Whereas in cannabis, because of a whole host of funding gap issues, given that most PE and VC funds have vice clause restrictions, which prohibit them from investing in anything quote unquote sin related, the fact that federally insured banks won't lend to cannabis businesses, and the fact that a whole host of other traditional private markets investors just aren't yet comfortable with the federal illegality of the industry, there's significant capital constraints still today in cannabis. And by our estimates, only about 15 to 30% of cannabis businesses are actually able to get the funding that they so desperately need, which allows us as one of a handful of pockets of institutional capital to come in at much more attractive terms and valuations than we would in other emerging industries.
Great.
So with that, Tiby, you want to talk about COVID-19 and how that's impacted the capital markets and the consumer markets in cannabis?
Yeah, absolutely. So, we're talking about a lot of these tailwinds that exist in the industry, but we're also mentioning that it's a very capital constrained industry for what I think are some obvious reasons now. COVID has certainly had a material impact on the cannabis industry. Take a step back in time, 5-6 months ago, before COVID really hit for everybody. We were curious what that was going to mean for the cannabis industry. It's still federally legal in the United States. The cannabis industry has not been put through a test like this before. Happy to say, fast forward, virtually every state that has some form of legal cannabis has deemed cannabis businesses essential. What we've seen is that the consumer has actually started to consume more cannabis than ever before. Why is that? Ways to deal with anxiety, boredom during the shelter-in-place measures, ways to deal with stress. That's actually why the projections have been upped this year from 16 billion in the United States to upwards of 17 to 18 billion. So we've actually seen spikes in sales across all the different states as consumers are really starting to stock the pantry. But even as the consumer drives even more significant growth in the cannabis industry, it's one that still remains even more capital constrained than before. As I'm sure everybody on the line here is aware, there's a lot of folks have kind of taken their foot off the gas of making investments, especially into the private markets or especially into more venture-like investment spaces. And the cannabis industry, even though the tailwinds I described there, is one that can't really hide from the broader capital markets environment. What does that mean for us as investors? It means that our dollar is going even further today than it was yesterday. These cannabis businesses are still operating in an environment that is growing at a very healthy pace year over year. Many of these companies are in growth mode where they're looking for capital to sustain their operations as they work towards getting towards profitability, and there's less capital out there. So we're seeing a reset in valuations in private markets. And I think more importantly than a reset in the valuations, we're seeing a lot of downside protection being introduced into the deal terms that we're looking at. So anything from liquidation preferences in the rounds to personal guarantees from the entrepreneurs, or convertible notes with significant discounts to the follow-on financing rounds, as it's a little bit harder to nail down an appropriate valuation today. What has COVID really done to the cannabis industry from regulatory side? Well, we actually think that the pace at which states will start legalizing is going to increase simply as a means to make up for a loss in tax revenue that many of these states are experiencing. The state of Colorado, for example, since legalizing recreational cannabis, is now boasting over $1 billion in tax revenue from legalizing the plant. Whereas neighboring states such as Nebraska, Kansas, Wyoming, they're still incarcerating people for cannabis-related offenses and spending tax dollars to do so. So one of the dynamics at play is that a lot of these states, there's not really border check marks or border patrols stopping the flow of legal cannabis going into their states and entering the black market. So not to say can't beat them, join them mentality is happening, but for lack of a better way to explain it quickly, that's kind of what we're seeing. So there's a lot of states that have had it on the ballot to legalize medical cannabis for the first time, or further legalize from medical to adult use. And simply put, we think that this is going to be that extra push that legislators need in order to further legalize cannabis within their states. I think that we're going to get to a point of critical mass where over the next year or two, you're going to have upwards of 40 states with some form of legal adult use or medical cannabis. And that's also going to really accelerate the need for a blanket lift of prohibition across the United States to start to figure out the banking mess in the industry, the interstate commerce issue. As every state, you may be aware, if you're touching the plant, you're essentially your own cannabis ecosystem. You can't, even if you're a neighboring state that's legalized, you can't ship cannabis from one state to another. So a lot of these issues are going to start to figure themselves out, I think, over the next couple of years here. We do have another question here from Ian. I've heard that the support of the Canadian Association of Chief of Police was at a tipping point for legalization in Canada. What similar key stakeholders are in the US? That's a great question. I'm not very familiar with the Association of Chiefs of Police in Canada, but similarly to what I was discussing right there, it's difficult today for states that still have illegal cannabis to stop the flow of legal cannabis into their states. And to give you a quick example, and not to kind of go down the can't beat them, join them path, but the state of New Jersey over the past, I think it's 10 years or so, has spent about $127 million incarcerating people for cannabis-related offenses. And then they look past to states like Colorado that are boasting that $1 billion in tax revenue. And they can't stop it. I mean, the war on drugs has failed, especially from the cannabis perspective. We know that there's a thriving illicit black market in the cannabis industry. We're starting to see studies that cannabis actually isn't as bad as even alcohol is considered. You're never going to overdose from cannabis consumption. People aren't smoking cannabis and going out and, starting bar fights or anything crazy like that. And I think that law, the law in the United States and legislators in the United States are recognizing that cannabis is not as dangerous as a Schedule I narcotic like cocaine or heroin, which it's being put on par with. And they're starting to say, we need to decriminalize this. So I grew up in Texas. My home state of Texas is in the process of decriminalizing marijuana as we speak. The city of Austin has essentially stopped arresting people and taking them to jail for cannabis possession. It's just, frankly, it's too difficult. And I think that the cat's out of the bag now, and it does not make sense. And I think that, the police in the United States are starting to recognize that. And it's also disproportionately affecting communities of color and lower socioeconomic communities as well. And there's a big push for that. Actually, one of our board members, Sarah Gersten, she is heading up a project called the Last Prisoner Project, which is actually involved in getting folks who have been incarcerated for drug-related or cannabis-related offenses to get them jobs in the booming cannabis industry, to start to put some money back in their pockets, making up for kind of the social welfare programs that have not existed in the past. Jordan, I don't know if you have anything to add to that there.
Yeah, I think that was a great answer, Tiby. I would just add, I think that it's also important to think about who the key stakeholders are that have been stopping progress on the cannabis front. And so I'd say one of the main roadblocks to federal legalization has been the Senate Republican Majority Leader, Mitch McConnell. He's been a very staunch opponent of any pro-cannabis legislation, and in fact has blocked a lot of legislation from getting to the Senate floor. So that's why we think, actually, in terms of this election here in November, more important than who wins the presidency even is if the Democrats take control of the Senate, because we think that will be a huge impetus to legalization if Mitch McConnell's no longer in such a strong opposition stance. And the other point I'd mention is that historically we've seen pretty significant lobbying dollars spent by the pharmaceutical industry pushing against cannabis legalization, for the same fact that a lot of folks who are addicted to opioids want it to be legalized, right? The pharmaceutical industry sees that cannabis is going to eat away much of their opioid revenues. You've seen in states like Colorado, where it's been legalized federally, at the state level, that opioid deaths have dropped about 25%. So that has historically been a major roadblock. But I think, again, as Tiby was saying, the pharmaceutical industry is now starting to see you can't put that rabbit back in the hat, that everything's going in the right direction towards cannabis legalization. So now they've started to shift gears, and instead of trying to oppose legalization, are really taking a more of a if you can't beat them, join them approach, and figuring out how they can play directly in cannabis in the future.
Absolutely. And one interesting stat just to drop on there, as far as getting people to change their perception and change their mindset. In Colorado, since legalizing adult use recreational cannabis, opioid deaths have decreased by about 25%, because folks are finding other therapeutic means to treat whatever ailments they're looking for. And then I guess another interesting stat to drop. At this point in time today, it's over 90% of Americans are now in favor of legalizing medical marijuana. Over 2/3 of Americans are now in favor of legalizing recreational cannabis. So, not to kind of, beat a dead cat here, but it's just a matter of time at this point before cannabis gets legalized in the United States. People see the benefits from it, and they also see the economic benefits from it. And, again, to our point earlier, we feel like the time truly is now.
Great. So with that, be happy to dive a little bit more into the cannabis public markets and why our internal view is that in general, they should be avoided in favor of the private markets. So the first issue is with regards to what I was talking about earlier, right? In the sense that in order to list on a major exchange like the NYSE, like the NASDAQ, like the TSX, you can't have any plant touching operations in a country where it's federally illegal, which by definition means you're boxed out of the United States, which is the largest, fastest growing market. So the companies to date who've been able to list on these major exchanges are the ones that are predominantly based in Canada, like Canopy Growth, Aurora, Tilray, and Kronos. The problem with that is multiple. So number one, and apologies to our Canadian friends on the call, but if you think about where to grow cannabis, Canada is actually one of the most illogical places in the world to do it. The climate is only effective for growing outdoors a few months a year, and Canada has one of the highest costs of labor in the entire world. Whereas you think about places that are closer to the equator, like Ecuador, Peru, Colombia, they have about, you'll be over time able to grow the same quality of crop for about 1/100th the cost you can in Canada. But that being said, because these companies based in Canada, these Canadian licensed producers, were the first ones that retail investors have been able to get access to and were able to list legally and federally, you saw massive speculation driving up the valuations for these public companies. predominantly at the end of 2018 and the first half of 2019. So these figures are from the end of 19 after you'd seen a little bit of a correction in the markets. But if you looked at these multiples from a sales perspective at the peak of the market, I mean, they just made absolutely no sense. In fact, there was a few months period of time last year when Canopy Growth had a larger market cap than Molson Coors, despite having 1/183rd the amount of revenues. So very clear that there is just a whole bunch of speculations priced into these stocks. Now that has pulled back a little bit, and you're starting to see a little bit more rationality in the markets, but even still, we think that the valuations priced in today are very speculative. The other issue you have is with regards to companies that do operate in the United States. For them to be able to access public markets, again, they're not able to list on the NYSE or the NASDAQ. So the vast majority of them have chosen to list on the Canadian Securities Exchange, which, as I already mentioned, has a whole host of issues associated with low governance requirements, low liquidity, high volatility in trading, typically low free floats, as managements of a lot of these companies own a vast majority of outstanding shares. So this is a lot of the companies that you may have heard of based in the US, like Curaleaf, Trulieve, MedMen, Green Thumb Industries, Cresco Labs. These are all listed on the CSE. So there are a whole host of issues associated with the public markets that should sort themselves out as investors become more rational in the market, and some of the federal issues that have created some of these capital markets listing issues resolve themselves. But for the immediate time period, we advise our clients to generally avoid the public markets.
And I just want to make a quick comment, and taking a page out of my past life at Goldman, I was a fundamental equity analyst doing bottom-up, approach to stock picking. And as we looked at the public markets in the cannabis space, we saw very few where fundamentals really made sense at the level where these companies were trading at. And I think that it's frankly done a disservice to the cannabis industry, because at this point in time, you really only have a handful of public companies representing an entire industry. So as speculative growth drove these prices and these market caps up to, frankly, very unjustified levels, people were saying, a lot of retail investors looking out there saying, oh, wow, the cannabis industry is booming. And then all of a sudden, all these companies missed their earnings and the prices came crashing back down to earth where they should have been in the first place. Then everyone's saying, oh, the cannabis industry must be really under pressure. What's going on? Simply put, there's not a lot of correlation between the actual consumer in the cannabis industry and how the industry is growing broadly and how the public markets are reacting. The cannabis industry is going like this right now, up and to the right. It's not totally smooth, while the public markets are doing this. There's not a lot of correlation between the public markets today and actually how the consumer is behaving and driving that growth from a $9 billion industry in 2018 to a 12 in 2019 to 16 plus this year. It's just not being represented well by the public markets. We actually, part of the reason we're here talking to you guys today is because we put a lot of thought leadership into how we're going about, advertising Key and putting our name out there and building a brand equity for ourselves at Key. And as thought leaders in the space, we've been publishing blog posts, white papers, newsletters, all sorts of things. And I encourage anybody who's on the call today to take a look at our website. We've actually written up some interesting blog posts on how we think that the public markets in cannabis are a difficult place for you to park your capital. Not saying that there's not some good securities out there to invest in, but don't just invest in the public cannabis companies or the ETFs out there thinking that you're going to ride that wave that we're discussing here of consumers really driving the industry. It really, fundamentals still matter in the cannabis industry. And we think that, investors had to learn that the hard way last year. But on the private market side, frankly, with that consumer sentiment from last year, it actually started to help the valuations in the private markets as well for us, even prior to COVID. So we have started to see a reset in valuations, and that's been really great for us being one of the few pockets of capital out there supporting these cannabis related businesses. I think with that, we will shamelessly dive into kind of our subsector focus and how Key approaches investing in the industry. So, the lion's share of the investments that we're going to be making today are going to fall under this ancillary business category, or the picks and shovels. And if you're familiar with that saying, it really just goes back to, back in the day, everybody ran out to California for the gold rush, but it was really, Levi Strauss selling the jeans, or the guys selling the picks and axes that were consistently making, fantastic returns and building wealth. Although you had those few people that actually did strike gold. In this case, gold being the plant itself, right? So we're targeting businesses that are operating in, enterprise level software solutions. So the point of sale systems that dispensaries are using, the co-packing facilities, HR and payroll solutions, the testing facilities, all of these ancillary support kind of needs-based businesses that are supporting the general growth of the industry itself. On the plant touching side, we do have appetite for branded products. Again, I've mentioned this, but it's really the consumers who are driving the growth of the industry, and branded products and CPG is certainly goes hand in hand with that. We are also interested in some vertically integrated grow operations, so folks who control the supply chain from seed to sale. We have not yet made an investment in that space yet, but I would assume that we'll add a little bit of that risk to the portfolio probably towards the end of our investment period. And where, what are unattractive sectors? Frankly, it's the sectors that I think everyone thinks of first when they think about investing in the industry. So we actually stay far away from dispensaries. We don't like pure play cultivation operations or anything that's really too capital intensive to get off the ground. We like these, software SaaS-based business models that are much more scalable. I'll get into some reasons why we like the ancillary businesses more in one of these next slides. But, dispensaries, very commoditized, right? It's much like a liquor store. Probably a great business to own and operate if you got the right corner of real estate. Otherwise, it's not really going to meet the return threshold of a fund investment. Cultivators, again, undifferentiated business model. The plant is certainly being commoditized. We've seen the price of flower in Colorado go from about $2,000 a pound to, in recent years, to about $550 a pound. Again, lower barriers to entry. It's just not really a place we want to play in. And Jordan, if you move on to the next slide, I'll talk a little bit more about the ancillary businesses. So generally, these non-plant touching businesses have less regulatory risk than the plant touching businesses. Simply put, because the plant touching businesses are dealing with a Schedule I substance today. Ancillary businesses, they're 2 or 3 times removed from generating revenue that touches the plant itself. That gives them a lot more flexibility, and more importantly, it gives them a much larger addressable market. These businesses can actually scale across state lines, whereas, as I mentioned earlier, plant touching businesses are really bound to their ecosystem in whatever state they're operating in. So we like these ancillary businesses that can actually go out there and put their software in dispensaries across the legal states, right? Another interesting piece is plant touching businesses today are subject to what's called Section 280E of the tax code. Section 280E essentially will not let a plant touching business deduct their expenses past cost of goods sold, marking for a much higher effective tax rate for these businesses. Again, a lot of these businesses are software businesses, SaaS-based business models. So generally much lower startup costs than going out and building, buying the real estate for a grow operation or for a dispensary and all the capital, all the CapEx that needs to go into getting those businesses started. So we love how scalable these software businesses are versus their traditional plant touching counterparts. And then I had mentioned earlier, the price per flower, continues to decline as more and more grows are introduced. So to really kind of touch on and to give some live examples of how we think about our investment strategy, we'll talk about our sourcing here. So again, our target companies are businesses that have proven business models that already exist outside of the cannabis industry, that for many of the reasons I've talked about, or we've talked about today, simply won't service the cannabis industry. So let's take this second one, for example, ADP, probably the most well-known HR and payroll solutions company out there, servicing the vast majority of Fortune 500 businesses. ADP, for a lot of the reasons we discussed, won't touch cannabis-related businesses today. Well, as the industries continue to mature, as these businesses have continued to scale and grow and become true enterprise-level institutional companies, they've realized that they need access to the same enterprise-level software that your supermarkets or your retailers or your liquor stores or whatever need access to, and they can't. Well, over time, entrepreneurs from places like IRI or ADP or Clear Channel have said, I see this huge opportunity in the cannabis industry. ADP won't do it. Well, I know how to build HR and payroll solution software, so I'm going to do it. So you've got a company like Work. Work has done a fantastic job. They've embedded themselves in over 1,000 cannabis related businesses today, diversifying across cultivators, across dispensaries, across manufacturers of cannabis goods, branded products, you name it. So really kind of encompassing the ecosystem of cannabis related businesses there, providing a needs-based software solution that's underserviced because simply they're in the cannabis industry. So a company like Work, in our view, is going to be a fantastic acquisition target for ADP down the road as the regulatory environment continues to ease. And that narrative really does kind of resonate throughout, how we think about targeting these ancillary businesses. So to kind of bring things full circle, the idea here is that as the regulatory environment continues to ease, these traditional industry operators are going to start to horizontally integrate their cannabis analogs into their balance sheets via acquisition. And we're already starting to see the M&A pace pick up. We don't think that legalization has to happen for an ADP to acquire a company like Work. We just think that there needs to be greater visibility that ADP is not going to have fear of prosecution by the federal governments for onboarding a business that is deriving a vast majority of their revenue from cannabis related businesses. And once we get to that point, I think you're going to see, first of all, the cherry on top, multiples start to increase dramatically as you see these traditional industry counterparts say, we need to get into this booming cannabis industry that's going to grow to be, frankly, larger than the black market. And we need to get kind of more of a buy and build strategy. To give you guys a really quick example, so BDSA right there, BDS Analytics is the leading data analytics provider in the cannabis space. Maybe move to the next slide, Jordan. So BDS Analytics, we actually led the Series C round of this company's financing in August last year. The company was raising $10 million. We were the lead investor with a $3 million equity check in that business. So we set the terms of the deal, valuation, got a board seat, tightened up the legal docs. We hired the best Silicon Valley VC law firm out there, Cooley, to do it for us. And this is a company that we underwrote to about a 50% probability that IRI would be the likely strategic acquirer of this business. And to bring this full circle, just a few days, literally after we handed the company the term sheet to lead the round, BDS Analytics announced an exclusive partnership with IRI where they're now sharing dispensary-based CBD data. And why is that important? Well, first of all, we're already seeing the companies integrate their systems early on. So that gives us a lot of confidence that IRI is going to be a great acquirer of this business. Cherry on top, it's going to add about $1 million in top line revenue to the company just through this data share that they're doing. But more importantly, to our thesis, as the regulatory environment continues to ease, these traditional guys are going to want to get involved. Well, at the end of 2018, the Farm Bill passed in the United States, legalizing hemp and hemp-derived CBD across the board. I'm sure everyone on the line here knows that CBD took the world by storm last year, being infused in anything from athleisure to beverages to pillowcases, you name it. IRI saw the massive growth of this new industry in the United States, and they looked out there to say, who is the best data analytics firm that knows the most about CBD, and let's go ink a partnership with them. Again, bringing our thesis full circle that as that regulatory environment continues to ease, aka the Farm Bill passed, IRI now said, I want to get into hemp and hemp-derived CBD, and I need access to it through the best data company, BDS Analytics. So that's really how we think about these investments. We're looking for proven needs-based business models with very clear acquisition targets at the end of the day for these businesses.
Great. Thanks, Tiby. And maybe just to give one more quick example of another type of business model that we like to target, that would be the last one on this page, Front Range Biosciences. That was the second investment we made out of the fund. And so Front Range Biosciences is the market leader for genetically modifying seeds and young clones for hemp and cannabis plants. In fact, what they're doing is they're figuring out ways to make strains of cannabis be more pest resistant, frost resistant, to grow more efficiently, to make sure that hemp seeds do not grow with more than 0.3% THC, which then makes them technically cannabis and need to be destroyed in countries where, in states where that's not legal. And so they're taking a very similar strategy that Driscoll's did when they were able to develop their berries and be so successful in the berries market. FRB is utilizing that exact same strategy. And if you think about compared to traditional ag, right? So the Monsantos and their competitors of the world typically spend about $2.4 billion each year just on corn research and development. FRB's management team estimates that the total spent to date in hemp and cannabis R&D is only about 40 million. So it's such a nascent industry where there's so many opportunities to improve the growing yields through efficient genetic modification. So another great business that we are very excited about. Think it'll make a very likely acquisition target for either a Monsanto or a Syngenta in a few years' time. So right aligned with our strategies where we're seeing the best opportunities in the market today.
Awesome. Well, we're coming up on time here. So I want to give anybody an opportunity to ask us any additional questions here. And I really hope that, everyone can walk away here with some conversational knowledge of, kind of cannabis 101, what's going on in the US. And then, obviously at the end here with what we believe is our unique approach to investing in the cannabis industry. And, the truth is that even just a few years ago, I don't think our investment strategy was one that was truly viable. It's taken, the last 4 or 5 years for dispensaries to get up and running and cultivators to get up and running and all these big brands that are now starting to emerge to realize that they need access to this same type of enterprise level software. And it's now at a point of growth stage where these companies have proven out their worth. As I mentioned, Work now has over 1,000 cannabis related businesses. Now we think it's really a lot of that risk has been taken off the table, not only from the cannabis side and the growth side, but also from the regulatory front as well. So, we truly believe that the time is now, and happy to field any additional questions that anyone may have. I dropped my email address in the chat. It's Tiby@keyinvestmentpartners.com. So if you have a question you'd like to take offline or learn a bit more about our strategy, certainly would be happy to continue the dialogue here.
Perfect. If anyone has questions, please use the chat or feel free to unmute and ask your questions.
Speak now or forever hold your peace.
Yeah, exactly. Still waiting for a few questions to come in here, so we'll give it a few minutes here as we're waiting. I had a question in regard to Canopy. We had actually their ex-CEO, Mr. Bruce Linton, as our guest speaker at our CFA event a year and a half ago. So it was very informative what he was describing as the industry, of course, and whatnot. And I think he was mentioning that the real focus or the real dollars and growth will come primarily from on the medical side. So I was just wondering, from your perspective, from the private equity side, are you looking at, I know you had the bioscience, I guess that would fill that need?
Yeah, it's a great question, Graham. And frankly, we also agree that the medical side is going to be probably one of the largest areas for growth. We're at a point in time today where we simply have not been able to study the plant because of its because it being a Schedule I narcotic. So universities aren't really able to get their hands on the plant. Big pharma is not really able to get their hands on the plant. There's very few studies that have been done on the medical side. Really, it's actually Israel who's leading the charge today in a lot of the medical research. And we're just right now at the cusp of learning a lot about what is the endocannabinoid system in our bodies, which really is what's regulating homeostasis in our bodies. So I'm actually in the process of writing up a blog discussing what the ECS is. It's fascinating, some of the research that's coming out of Israel and from some of these companies. GW Pharma actually has the first FDA approved drug, cannabis derived drug. It's a drug called Epidiolex. It's essentially a heavy dose of CBD that's used to treat some very rare forms of epilepsy. And it's been shown to be very, very effective in treating those. And I think that that's frankly just scratching the surface there. But when we think about the cannabis industry, right, we've talked about the $100 billion black market. You can really, that is pretty much all recreational use. You know, we expect for the cannabis industry to grow to be much larger than just that recreational black market, especially as big pharma starts to get more involved, like GW Pharma. Something interesting that we know is, as investors in BDS Analytics, we're also aware that some of their biggest clients that are basically eating their data right now are some of the big, you know, the well-known large big pharma names here in the United States, many of which who have not actually made a move yet into the cannabis industry. But what we do know is they are keeping a close eye on it, and they are starting to study the data and the metrics, which I think is implying to us that they will also start to make some serious moves as there's more visibility into the regulatory landscape here.
Right, right.
Yep. And Graham, I would just add to that, it's important to think about the medical market as it exists today, right? Because you saw in our earlier slide, there's 33 states that have legalized it for medical purposes. But it's important to note that medical purposes today is for a lot of folks, it's maybe just a way to work around to get to effectively a recreational license. Additionally, a lot of folks who are taking it for medical purposes are for very generic symptoms, like they want to take it for nausea, they want to take it for insomnia or anxiety, and that's all great and well. But what you see is a lot of times when those states legalize rec, that those customers, those patients stop getting medical cards, not because they don't still need it for technically medical purposes, but just because they no longer need to, right? They can just go and get it legally from a recreational standpoint. But over time, to Tiby's point, as we really understand the cannabis plant much better, we think that you'll transition into a real medical 2.0 market where you have true efficacious drugs that have been proven to say, hey, this type of cannabis strand is actually effective at curing this specific type of epilepsy, or for helping to stop this specific type of cancer, that sort of thing. So we're still very early days on that. We definitely agree there's going to be huge opportunities. In fact, recently we've screened deals that one is looking at sequencing different cannabis strains to exactly combine that with the human DNA sequence and try to understand what ailments it's effective at treating. We've looked at businesses that are helping to provide malpractice insurance for cannabis doctors. We've looked at businesses that are helping to make pharmaceutical benefits management platforms to help reduce the costs of medical cannabis to patients. So there certainly are huge opportunities, but it's really unique in the sense that even though medical, quote unquote, cannabis is typically legalized first, the medical industry is still in a lot of ways much more nascent than the recreational industry is.
Perfect. Oh, I think we may have another question here coming up. I don't know if you can see it on your screen from Danielle.
Do you foresee adapting your capital allocation to favor branded plays more as regulatory and social factors spur the industry to mature in big CPG, looking to expand into cannabis via acquisition? That's a great question. Tiby, do you want to take that one?
Yeah, I think it's a fantastic question. I think that as legalization happens, especially as interstate commerce opens up, the CPG space is going to become even much more interesting to us today. We have actually, our house view has really been that while we love the branded products play, and we certainly think that that's probably going to be one of the best places to park some capital in the future, it's just a little bit too fragmented today. And I'll give an example. Going into dispensaries in Colorado or dispensaries in Oregon, you see 100 different brands on the shelves with tons of different SKUs. And you know, we're not really in the business of throwing darts at a board and taking a guess on who the winner is going to be. I always love to give the example that if, 10 years ago, I would have put Tito's vodka or Absolute vodka in front of you and said, tell me who's going to win the branding war. There's probably a 50% chance you would have gotten right. And the truth is Tito's is eating Absolute's lunch today. And we don't really know why. Tito's has this cool factor to it, right? It's much more difficult in the cannabis industry than just picking, two of the top players. Jordan, what's the stat in California today? The largest brand still owns less than, I think, like 7% or something of the market share.
Yeah.
Less than 5% of the market share, right? So what does that say to us today? It's too soon to tell who's going to really win that branding war. Although I will say that COVID has actually increased our appetite for looking at more branded product deals today. Now, why is that? So people aren't really spending as much time with their friends or talking to bud tenders and dispensaries, looking for recommendations and basically exploring cross categories and trying new things. And what the data is suggesting today is that those leading brands are starting to pull away from the pack. So we have actually opened up our funnel to start screening even more branded products investments. I will say that Colorado is starting to kind of make a name for itself as kind of the tech ancillary hub in the cannabis industry. And California, it's probably no shock to anyone, is really starting to emerge as being the cool branded products place in the industry. So I would probably say that the Diageo of cannabis is likely going to emerge from California. I think that the branded products that went out are going to basically drop the traditional naming conventions of Afghan Diesel or Sour Kush or whatever, right? And it's going to start being more effects-based branding is what's really starting to take charge. So brands that don't say, oh, this is Bubba Kush, try it, it helps you sleep. It's actually called Sleep, or it's called Calm, or it's called Go, or it's called, Chill, or whatever it may be. So certainly a lot of interesting brands that are starting to emerge in the cannabis industry. And I think more importantly, we're starting to see a lot of folks come out of traditional CPG from big alcohol, from big tobacco, from Mars brands, starting to emerge in the industry that really know how to kind of connect with the consumer. And with the rise of affiliate marketing as well, brands are actually a lot, it's a lot easier for them to go out there and hire the right, influencers or blog posters to go out there and get their brands out there. So certainly a lot of opportunities in the branded product space. I think at the end of the day, we'll likely certainly add, 1 to 3 names in our portfolio as we look to diversify some risk there.
Great.
So we have another question.
Yep.
So Howard is asking, once cannabis is no longer a Schedule I drug, what does the crystal ball tell you about the impact on the illegal market and the resulting impact on the legal market? It's a great question. And California is a good example of where legalization has happened, but the black market is still thriving. California politics and regulations and taxes are still causing for basically much higher prices on the legal market than the black market. And that's resulted in a very, a thriving black market there still. So it's going to take time, even after legalization, for all the infrastructure to get put into place and to a spot kind of, more similar to Colorado, which has done a really great job of getting, starting to drive out the black market as the prices come down in Colorado. So you're going to need to see more states come online. You're going to need to see interstate commerce open up. You're going to need to see dispensaries be more commonplace, or grow operations. And as that price per flower comes down and it becomes more competitive with the illegal market, you'll see a lot of that demand evolve. COVID, again, has actually accelerated the evolution from the black market to the legal market, as a lot of folks don't want to deal with drug dealers today, and they don't want to deal with cannabis that's coming from God knows where, whether it's Mexico or who knows, because they don't know who's been touching it, who's been handling it. So COVID has actually been another tailwind for evolution from the black market to the legal market. I hope I answered your question well. It looks like we got one more from Daniel. I'll read it off and I'll let Jordan take this last one. So, do you foresee adapting your capital allocation to favor?
That was the last question. We just
it was, yeah.
Yeah. But I was just going to add one thing.
There's one more question though, Jordan.
Okay.
Again from Daniel. Do you think that an early differentiator within the branded product space will be increased transparency surrounding product safety? Short answer, absolutely. To that point, are you seeing a convergence towards strong analytical standards within the lab testing ancillary space? Definitely. Jordan, maybe you can touch on that a little bit.
Yeah, I think we definitely are seeing more of a convergence for testing standards in the lab space. And you're really starting to see a couple of companies that are really emerging as the leading provider of pathogen testing kits and all the required testing to make sure that cannabis is sold legally. So I think in fact, that's a subsector that we've been targeting pretty highly as a potential investment opportunity. So you're spot on that. Just as the industry continues to mature, you see more established market leaders in each of these subsectors providing traditional services, that you'll see a lot more conformity and consistency across different regulatory regimes for testing standards.
Yep, and it really kind of goes into what I was saying there earlier about COVID really accelerating that black market evolution to the legal side.
Right. Well, I don't see any more questions at this particular time, so I just wanted to say thank you very much for a very informative and interesting presentation to you both. We usually have a gift that we provide our speakers that are here. So I'll have to somehow get that down to you guys in Colorado. So I just want to say thanks again. Very, very good presentation. Before everyone leaves, just a quick reminder that we have our annual golf tournament coming up next Tuesday at Greyhawk. So please register. Lots of room available still. So that'd be lots of fun. Our next webinar will be September 15th with CIBC Asset Management, and we're going to be taking a look at absolute return strategies in a post-COVID world. So another very good webinar coming up. So once again, thank you very much for joining us on the webinar. Have a great week, everybody. Thank you.
Thanks so much, guys. That was a ton of fun. Appreciate you guys having us.
Take care, guys.
Bye-bye.
Bye-bye.